Good morning. I'm Dr. Madhu Viswalla, assistant. In this class, we are going to learn about departmental accounts. This is the fifth unit from block 2. Let's start the introduction of departmental. Before that, we have learned the branch accounts, right? Dependent branches, independent branches, and the foreign branches. We have learned a lot of things about branch accounts as well as in the previous class, we have learned the difference between the branch accounting and the departmental accounting. So that I hope you don't have any doubt about the departmental accounting and the branch accounting. Now we can see the introduction of departmental accounting. It is a system of accounting which maintains a separate books of account for every department or branch of a business enterprises. It is one where accounts are prepared and maintained for the different departments of an organization on an individual basis for evaluating their results in a fair manner. These individual books of accounts are then consolidated together with the accounts of head office for preparation of financial statement of business. In this case, in this departmental accounting, the organizations are located in the same place, the same building, and everything is there. But the department is different from one to another departments. Some of the organizations having number of departments. So each departments they are maintaining different books of accounts. Why they are preparing the different books of accounts for each department? They should understand how much is the profit, how much is the loss, whether this department is profit or loss. They should come to know whether it is the profit or loss of the organization. The managers as well as the top level higher officials, the owner of the organizations are interested to know whether it is profit or loss. So they are preparing this departmental accounts. But in the head office, they will prepare the financial statement of business with all the departmental details. In this departmental accounts, aim is recording all the expenses and the revenues of each department in a separate books of accounts. It enables in measuring the profitability of every branch and detect if any department is underperforming than their capability. Some of the organizations, when they are preparing this departmental accounts, while they are find out it is lost, they can shut down that particular department. When they are gaining more profit for the organization now, they can develop the particular department to get more profits. So they can motivate the managers and motivate the particular department employees so that they are preparing such departmental accounting. Then we can see the meaning of departmental accounting. Very big business with a diverse trading activities conducted under the same roof, the same usually divided into several departments, and each department deals with a particular kind of goods or services. For example, a textile merchant may trade in cotton, woolen, and jute fabrics. The overall performance for this type of business depends, however, on departmental efficiency. Now we can see the objectives of departmental accounting. Already we have learned for everything having some objectives and limitations and advantages, importance, everything is there. So similarly, in this departmental accounting also having some of the objectives. Now we can see the objectives of departmental accounting. The first objective, what is that? to know the financial position of each and every department separately. It is helpful to make a comparison. Some of the organizations, what they are doing now, they should know the financial position of each department. But some of the organizations are not giving much more importance to know the financial position of the particular department, but they are giving the most involvement and importance to know the financial position of the whole organization. But some of the organization wanted to know the financial position of each department. That's what they are preparing this departmental accounting. But when they are preparing such financial statements and departmental accounts, this is helpful to the management to make the comparison for each department. The next point is to check out the inter-departmental performance. Unprofitable departments will be revealed. You know, some of the organizations having a lot of employees, they are working into the organization, lot of departments are there, but some of the departments employees perform better. When they are performing better, they put earn more profit. It will make the organization as profitable. But some of the departmental employees are not performing better. So this departmental accounting is helpful to the management to check out the departmental performance. This is not only related with the employee, but it is related with the entire department performance. That is transaction related and the profit related, everything is there. In case it is unprofitable now, it will be revealed. The next point is to evaluate the performance of the department with the previous period result. The gross profit of each department can be ascertained. The organizations are evaluating the performance of the each department with the based on the previous period result only. So they can analyze gross profit of each department based on this detail. Then it helps the owner formulating the right policy for the future. The progress of each department can be monitored for appropriate or actions to be taken. The companies are formulating the policies every year. Some of the companies are framing policy for every 5 years, but some of the companies are forming policy for every year. When they are framing the policy, the departmental accounts will be helpful to the management to take very good decisions for the organizational development. The next point is to assist the management in making the decisions to drop or add a department. The result of operations can be used to determine the remuneration of managers of each department. Some of the companies are giving remuneration to the managers based on their performance and based on the company profit. So that this departmental accounts will be helpful to the organization to determine the commission and the remuneration of the managers. Then it provides detailed information about the entire organization. It will helpful to the management in deciding which department should be developed more and which should be closed in order to maximize the profitability of the whole company. The next point is it will assist the management for cost control. It helps in determining the commission of the department manager when it is linked to profit achieved by their department. Moreover, this departmental accounts will helpful to the management in all the manner so that they can run the organization in smooth manner and profitable manner. Then we can see the advantages of departmental accounting. Some of the advantages are there. This departmental accounting is on which enables managers in doing a performance comparison of various departments of business. A separate book of accounts is prepared for every unit which records revenues and expenses of this unit on an individual basis. Profit is calculated and compared with one another for determining their performance level. Next, we can see the concept of departmental accounting. Departmentalization enables big firms to determine the areas needing special attention to the achievement of overall objectives. The units or departments needing more funds and more attention than others, and the ones contributing more toward goal attainment could identify with good departmentalization. The purpose is basically to find out the performance and the capability of the units or departments to make adjustment for the achievements of the firm's objectives. Previously, I have explained you what is the objective of the organization. The objective of the organization is earn more profit. That means maximizing profits and increasing their resources. Each unit, department, or subsidiary gives the free use of some of the assets of the firm and some responsibilities which can be profit making. This revenue generation or cost control as expenses incurred by the firm on behalf of all its departments. Indirect expenses are to apportion to the departments. If each department is to present a financial statement or if the statement is to prepare by the company on a departmental basis. Next, we can see the principles of departmental accounting. Some of the principles they are following for maintaining the final accounts of this departmental accounts, how they are preparing the final accounts, and these are the things will be maintained. That the gross profit or loss and the net profit or loss of each department determined separately before taking. The totals of the appropriate accounts are the balance sheet of the business. The next point is there should be some basis of apportioning gains and the expenses to the departments or units of the business. These are the things will be helpful to the organizations to take better decisions and framing policies. Next, we can see the formulation of policies. The formulation of policies is most important for the organization. How the companies are formulating the plans, which depends on the company's and the employees' performance, and it depends on the profit too. Okay, the formulation of proper plans and policies in an important role played by departmental accounting. Managers get detailed information about every unit through the individual book of accounts. They analyze these set of books for determining the efficiency level of various departments. Proper knowledge of every business units enables them to take proper actions for increasing the profitability of the organization. Next, we can see the assist in expansion and the shutdown decisions. Everyone knows about it. Based on the profit only, the company top level management will take the decisions whether they are going to expand the business or shut down they are taking the shutdown decisions. This departmental accounting plays an inefficient role in deciding the expansion and the shutting down of different departments of an organization. Managers, through an individual set of books, are able to detect which units have a more important role in business operations and which one plays the least role. They can easily decide on the basis of result that which units should be expanded further and which one should be closed. Based on that, departmental accounts only they are taking such a decisions. And if it is gaining more profit now, they will develop their business and they will expand their business so that they are investing something lot. Then reveal the success or failures of units. This accounting, the departmental accounting, determines the success rate and the failures of every department within the same organization. Every expense and income of these individual departments are properly recorded for calculating its real profitability. The amount of revenue generated by these units gives a clear idea about the one that is successful in their role and one that fails to meet their goals. So it depends on the profitability of the organization. Simply, we can say the success and the failure of the organization depends on the performance of the each departments. Then we can see the benefits to the auditors and the investors. This departmental accounts not only benefit for the management and the managers, but the auditors as well as the investors are getting very good benefits through this departmental accounts. It supplies all relevant information in a correct manner about each unit of business to auditors and investors. Normally, the investors are searching the very good reputed organizations. If the company having very good reputation in the society now, they are ready to invest more with the same organization. So that investors will be get very good benefits and return with from this organization. Similarly, the auditors also. The auditors can easily access to the account of each individual unit for knowing all expenses and revenues and thereby enables them in verifying the correctness of financial statement. Investors can get a clear view of profitability and overall value of an organization. If the departmental accounts is not there now, it is very difficult to identify the particular department of profit or loss. Then we can see the determine managers commission. Some of the organizations are giving commission to their managers. So this departmental accounts will helpful to the organization to determine the manager's commission. Some of the production company, they are giving the commission to their particular department, the production managers, as well as the employees. Based on the production, they are giving the commission. And it will helpful to the organization to determine the profitability of the organization as well as they can determine the managers remuneration also. Some of the organizations are giving the remuneration to their managers based on the performance and the productivity of the particular department. So this departmental accounting assist in the fair calculation of managers commission working within the different departments of the business. These commissions are paid to managers on the basis of profit earned by their respective departments. Proper accounts that are maintained separately for every unit yield right amount of their profit levels. Next, we can see the promote competitive spirit. When the companies are preparing the departmental accounts, it will promote the competitive spirit of each department. So the every department having the competitive spirit, so they can get more, they can give more involvement to the organization to improve the productivity. Through that, they can get more benefit from the organization. So when the companies are preparing the departmental accounts, automatically it will promote the competitive spirit among the different departments. It promotes a sense of competitive spirit among all staff working within an organization. All operations of the organization also will be monitored by this departmental accounting. The team members are rewarded on the basis of performance of the departments that is revealed by the departmental books of accounts. This motivates staff to work efficiently for improving the overall performance. When the companies are taking steps to motivate the employee to give some monetary benefits and non-monetary benefits to their subordinates as well as the top level managers. Some of the organizations are giving more reward to their team members. When they are getting these benefits from the management, automatically they will involved with the organizations and they are working towards with the organization with more dedication. So the motivated stock will work more efficiently and automatically the overall performance of the organization also will be improved. Next, we can see the enhanced profitability. When the employees are working towards the organization with the proper motivation, with the proper benefit, automatically the profitability of the organization also will be increased. Some of the organizations are giving more benefits and additional income and monetary and non-monetary benefits depends on the profitability. When the employees are motivated, they are giving more involvement and they are works towards the organization for the successful of the enterprises. So that automatically the profit of the organization will be increased. This departmental accounting has an efficient role in increasing the profitability of the business organization. This system of accounting closely monitors every aspect of costs and revenues of organization related to various units for avoiding any errors and frauds. It ensures that all resources are efficiently utilized with minimum wastage. These separate account books assist the managers in determining performance level from time to time and taking corrective actions, which leads to raising the profit level. So in this chapter, we have learned lot of things about this departmental accounts. The previous units, we have learned about the branch accounting. So you should have clear idea about this branch accounting as well as the departmental accounting. And next classes, we will learn how to calculate the manager's commission and how they are preparing the profit and loss account and the balance sheet. So further videos will be more helpful to you to understand and how can the organizations are preparing the final accounts. So thank you all.